Have you ever wondered how ETF investment works in India? Let's start with the basics. An ETF, or an exchange-traded fund, is an investment fund that's traded on stock exchanges, much like individual stocks. But here's where it gets interesting. Unlike investing in a single stock, an ETF allows you to invest in a whole sector, index, or commodity. Imagine being able to hold a slice of the entire technology sector, or the top 50 companies in India, all within a single investment. It's like buying a whole fruit basket, instead of just one kind of fruit. This makes ETFs a powerful tool for diversification, providing a way to spread your investments across a wide range of assets. So, ETFs offer a unique way to diversify your investments. But how does one invest in ETFs in India? Stay tuned as we delve deeper into this exciting world of investing. Investing in ETFs in India is quite straightforward once you understand the basics. So, let's dive in and get to grips with these fundamentals. First and foremost, to invest in exchange-traded funds or ETFs, you'll need two key elements: a demat account and a trading account. The demat account, short for dematerialized account, is essentially a digital locker where your shares, bonds, ETFs, and other securities are stored in electronic form. Think of it as your personal safe for all your investment goodies. Now, the trading account is your gateway to the stock market. It's through this account that you place your buy or sell orders for ETFs. So in essence, these two accounts work in tandem: the trading account for transactions and the demat account for storage. But where does a broker fit into all this, you might ask? Well, a broker plays a pivotal role in the process. They act as intermediaries between you, the investor, and the stock exchange. They execute your buy and sell orders, helping you acquire or dispose of ETF units on the exchange. ETFs, like shares, are traded on the stock exchange and can be bought and sold at market price during trading hours. This means the price of an ETF can fluctuate throughout the day, based on supply and demand. Unlike mutual funds, which are priced at the end of the trading day, ETFs offer real-time pricing. This gives you the flexibility to buy and sell ETFs at any point during market hours at the prevailing market price. So, there you have it, the basic framework of ETF investment in India. A demat and trading account to facilitate your transactions, a broker to execute your orders, and the ability to trade ETFs at market price during trading hours. Now that you understand the basics, let's delve deeper into the process. Stay tuned as we navigate the step-by-step guide to investing in ETFs in India in our next segment. Ready to invest in ETFs? Here's a step-by-step guide to help you navigate the process. Step 1 is to open a demat and trading account. Now, what's a demat account, you ask? Well, it's an account that holds all your shares and securities in electronic format. It's like a bank account, but instead of money, it holds shares. To trade ETFs, you'll need both a demat and a trading account. The good news is that most banks and brokers offer these as a combined service, making it easy to get started. Next up, step 2 is choosing a broker. This is a crucial step. You'll want to choose a broker who offers a user-friendly trading platform, competitive fees, and excellent customer service. Spend some time researching and comparing different brokers before making your decision. Now on to step 3, which is researching and selecting an ETF. ETFs come in all shapes and sizes, tracking everything from broad market indices to specific sectors or commodities. You'll want to consider factors like the ETF's past performance, management fees, and how well it fits with your overall investment strategy. Remember, investing in ETFs should be a marathon, not a sprint. You're in this for the long haul. Step 4 is placing an order through your broker. Once you've selected an ETF, you'll need to place a buy order through your broker's trading platform. You can choose to place a market order, which buys the ETF at the current market price, or a limit order, which only buys the ETF if it drops to a certain price. Finally, step 5 is to monitor your investment. Like any investment, it's important to keep a close eye on your ETFs. This doesn't mean checking them every hour, but it does mean reviewing your portfolio regularly to ensure it's performing as expected. If it's not, don't be afraid to make adjustments. Investing in ETFs is that simple. But why should you consider ETFs as part of your investment portfolio? There are several compelling reasons to consider ETFs for your investment portfolio. First and foremost, ETFs offer diversification. What does this mean? Well, each ETF is made up of a bundle of different securities, such as stocks or bonds. This allows you to spread your risk across a broad spectrum of investments, reducing the potential impact of any one security's performance on your overall portfolio. Second, ETFs tend to be more cost-effective than many other types of investment funds. This is because they are passively managed, meaning they simply aim to replicate the performance of an index rather than trying to outperform it. As a result, they typically have lower expense ratios than actively managed funds. Third, ETFs are transparent. You can easily see what securities are in an ETF and in what proportions, allowing you to make informed decisions about whether that ETF fits with your investment strategy. Fourth, ETFs offer flexibility. You can buy or sell ETFs at any time during the trading day at market price, just like a stock. This is different from mutual funds, which can only be bought or sold at the end of the trading day at the net asset value price. Finally, ETFs offer liquidity. This means you can easily convert your ETF shares into cash, making them a good option if you need to access your money quickly. As you can see, ETFs offer a range of benefits that make them an attractive investment option. Before we wrap up, let's quickly review the key points about ETF investment in India. Remember, ETFs, or exchange-traded funds, are investment funds traded on stock exchanges, much like individual stocks. They offer a convenient way to invest in a diversified portfolio without the need to buy each security individually. The process of investing in ETFs begins with opening a brokerage account, selecting the appropriate ETFs based on your financial goals, and purchasing the shares through your broker. It's crucial to remember that, like any investment, ETFs come with their own set of risks and rewards. Investing in ETFs offers several advantages, including diversification, flexibility, and cost-effectiveness. But don't forget the importance of continuous research and monitoring of your investments. Stay informed about market trends and adjust your strategy as needed. So there you have it, a beginner's guide to ETF investment in India. Remember, the key to successful investing is understanding your options. Happy investing!